Hello and welcome to Trading 5 Talents. In today's video, I'm going to be covering the trades that I've made in Mara over the past few weeks. And if you remember from my previous video about making $1,000 per week using 4 stocks, Mara was one of those 4 stocks. This is a cryptocurrency miner. I'm very bullish on the sector. I've been using it kind of frequently this month of November, but there was a comment on that video that I made about how I'm managing my Mara positions. And so this is sort of an answer to that question. And so I'll show you the trades that I've made so far this month. So this candlestick chart, which is using TradingView platform to plot this data out, extends from October 25th all the way until the first or second week of December, just so you can see where some of the expirations are going. But here's the first trade that I made. It starts in October, last week of October 25th. I sold one put at the $49 strike price, which is this horizontal line, and then the expiration date was the 5th, November 5th, which is this vertical line. So as you know, if you sell a cash secured put, you have to have the cash to be able to put this trade on to buy 100 shares at the strike price if it expires in the money. So that would require $4,900 in order to sell one of these contracts. So if the price closes above my strike price by the expiration date, as you can see it did, it would have expired worthless. However, after this big spike right here, there was a lot of the volatility that sort of escaped from this options contract, and along with theta decay, I was able to close this trade right here on, it looks like November 1st. So I sold one $49 strike price put against Mara, and I opened it at $1.86, so I received a $186 credit. I closed it 35 cents or $35, so my profit was $151 for this one trade, and that's a 3.1% ROI. All right, that same day I sold another put. This was the $50 strike price, and you can see this horizontal line is the strike price, and then this is the expiration date. So basically I just rolled it out another week, rolled up and out another week. And you can see the price action of Mara. I mean, it just went on a tear, huge gap up over the weekend a couple weeks ago. And because of that loss of volatility, the price was just so far away from my strike price, it really wasn't worth much at all. So I was able to close it in about a week or so. So this was, again, I sold one $50 strike price, $1.62 open, 12-cent close. So a $1.50 profit per share. So that's $150 profit, 3%. All right, now each of these puts here, and then also this next one I'll show you. Whenever I sell a cash secured put, I'm often asked this question, how do I choose the strike prices? I choose this, for me, this is personal, it's not financial advice, but I personally choose strike prices based on the probability of profit. So I'm looking for a 70% chance or greater that it's going to expire out of the money. And to do that, in Robinhood, it just shows you it's 70% probability. If you're looking at deltas, it's about negative 0.3 or greater. So that's all I'm looking at. Honestly, I don't look at technicals. I'm sure people reading this chart can see, different resistance levels, support levels, and where they would and would not enter a trade. And I might be violating some of those technical rules, but I'm looking for the probability primarily, and also the ease of trading. I trade on my mobile phone all the time. I am not in front of a computer looking at these trades and analyzing the price action. So that's just my personal style though. So that's how I choose it. I choose it based on probability. All right, so this $49 strike price, the $50 strike price, those were all 70% chance or greater of expiring worthless. I waited a week. So here's a Friday close, and you can see a huge spike up early in the week, came back down, and then it just started dropping dramatically. So I believe during this week I didn't have the cash to put on another put. I had to wait for some other things to expire. So by the end of the week, I was able to sell another put right here. This was a Friday. And this put was the $65 strike price. And you can see, if you're in Mara, then you can probably feel it as well. We had a very steep decline over this week right here. This was last week. Very steep decline. So one of the things that I do when the price is dropping way below my strike price, and that's where my strike price was. When it drops way below my strike price, what I like to do, one of the things I like to do is to simply sell another put if I have the cash available. So I went through a whole list of, half a dozen things to do when the stock price falls below your strike price on a cash secured put. So when that stock is crashing, I went over a list of things to do. There's a video on my channel. You can check that out. One of those things was to sell another cash secured put. So for this trade here in yellow, $65 strike price, I sold one of them, $1.60. And as you can see, it's going to expire in the money. It's way below my strike price. So I had to buy these shares at $65 each, even though it was trading around 52-ish. All right, but while this trade was going on and I saw this steep decline, I sold another put right here, and this is in the pink purple color. I sold another put right here. This was a $59 strike price. That's this purple horizontal line right here. Same expiration. I just dropped my strike price lower. So if I got assigned, at least I could, have a lower cost basis rather than being assigned at 65. I'm assigned now at 59. So, the difference of those two is what? $62, 200 shares at $62 as a cost basis. So that was a little bit more palatable. So I did that. But you can see the Mara price dropped even below that. It made a little gain at the end of the week, but it didn't quite get up to my $65 or my $59 strike price. So I was assigned both of these. So now I have 200 shares, some at $59 and then some at $65. So that's what I'm currently holding, these 200 shares of Mara. All right, with that purple trade, that pink trade, $1.95 in premium, and again, it expired in the money, so I collected all the premium, and you can see the ROIs for these trades, the yellow and the pink trade. All right, so now I have 200 shares of Mara, and what I did here is, first of all, I sold another put against Mara, and I sold a $46 strike price put, and you can see that here, and it expires on December 3rd. And so here is the price right here, and so I sold a put way down here. Obviously that trade is still on, hasn't expired yet, and I haven't reached my profit target, which is approximately 90% for these trades. All right, so that's that one. I received $2.20 credit, 20 cents credit for that trade, and with these 200 shares that I now own, I'm going to start selling covered calls. And so one of them is right at my right at my cost basis of $59. That's here in orange, and that expires also December 3rd. For that trade, I received $2.40. So I did that based on one of these spikes right here. And so as it went up, that's the best time to sell covered calls. When things go down, you want to sell a put. Things go up, you want to sell a call. So on one of those spikes, I sold a call, and so I was able to get $240 premium for that. And then I did the same thing when it spiked, and I sold the $65 call because, again, I was assigned shares at $65 strike price, so I want to sell a call at or above my cost basis if possible. And so that's what this one is here, this gray one, same expiration date, and I received $1.40 or $140 premium for that trade. So these are the trades that I've made so far. This is it's going to span about 6 weeks before all these things expire. So far, my realized profit, which is basically adding all of these closed trades together, is $656. My unrealized profit, which if I added all of these open trades together, is $600. So if I close it, so let me show you. If I close it at about 90%, you can see I'm going to get $540. So let's just assume, $540. So $540 plus $656 of my realized profit, that's about $1,200 just on this one ticker, just on Mara, $1,200. And that's going to be, you know, the 4 weeks in November, a week before, and then a week after, so about 6 weeks. So $1,200 divided by 6 weeks, this is about $200 a week on this one stock, this stock Mara. So I've been pretty happy with that. Again, I'm still bullish on this, so I think eventually I'll be able to get rid of my shares at $59 and $65, or if it keeps on going up faster, then I will simply just roll my cover calls out higher and higher, and then I can also get some gains on the sale of the stock as well as the premium for the covered call. So if you have any questions about this particular set of trades or about the wheel strategy in general, selling calls and selling puts, then leave a comment down below or ask it on Twitter. You can follow me at Trading5Talents, and I'll be able to answer it there as quickly as possible. So if you want to know a little bit more about how I'm using the wheel strategy for lifestyle trading to pay off things like Tesla Model 3, then go ahead and click on the subscribe button and turn on the notifications so you can catch all the updates. Until next time, trade wisely and take care.